Hello, this is Dave, and welcome to Equity Story. I hope you are having a good day, and don't get too worried about this market pullback because I'll talk about that in a while. Um, this is obviously just general share advice and not personal advice. And before I start today, I'll tell you what, it's nothing worse than sort of people in our business, analysts, and they get it right, and then they have this really smug look on their face afterwards. So um, we'll try and avoid that, won't we? Um, but let's have a quick look at what's going on today because obviously what we're seeing here is pretty strong pullback in the market. So there's your Dow. It's on the way back down again. Looks like certainly coming down to retest that sort of 30,000 level, and I should think going a lot lower. And I think it was really disappointing today. Again, you had Biden, who I don't want to give him too hard a time. Well, yeah, I do actually. I think he's the worst president of America, economic president they've ever had. He's most probably the worst foreign policy president America has ever had. And it's disappointing that him and his cronies. I'm not anti-democrat. Some of the greatest Democrats in the world in the past, but they're celebrating their anti-inflationary measures that or their new policies that they've got through the Senate. I mean, really? I mean, the policies are actually going to make it a lot worse. I mean, you get inflation when you increase the money supply and, forgiving student loans for their debts. I mean, I get it. It's a nice thing to do. But it's just not helpful right at this moment of time. And poor Powell is fighting as hard as he can to reduce inflation, try and get the economy under control. But unfortunately, I think with the policies with Biden at the moment, it's going to be really hard for him to do that. And again, no one is more green and more renewable than us at Equity Story, but he's just gone too hard too quickly. Oil prices are up and gas prices, and it's just putting inflation throughout the whole of society and around the rest of the world. Unfortunately, the question is, you know, what do we do now? Well, it's only going to get worse. This isn't the, I was listening to some experts, so-called experts. Well, they're saying that maybe this is it now. We've got peak CPI numbers are at their peak, and this is the time to buy the market. I'm of the other view. This is only really just started. This inflation is only starting to heat up, and now they're talking that the Fed might lift their Fed funds rate, the interest rates up to 4%, 4.25% by the end of the year. It's still not going to dent, in my opinion, these inflation numbers. I think we're going to need interest rates a lot higher than where inflation is, maybe 6, 7, 8%, and possibly the same here in Australia as well. So high interest rates, what it means is um, companies uh, basically higher mortgages. It slows the economy down. Businesses will slow down, and we need that. We need that recession. And unfortunately, the only thing that I think is really going to calm these inflation numbers is that we need a recession. People need to lose jobs, and it's awful to say, but we need to get rid of this tight labor market, and there needs to be a lot of pain to do that. Now, the good thing is that markets are forward thinking, and possibly what we need right now is the markets to re-rate the future earnings and to re-rate where the economy is going to be in a year. And that fall can happen quite quickly. So you often see when the markets go down, they go down really, really quickly. So possibly if, and I know it might sound weird, but we're going to go lower. I just want us to go lower really quickly. Because then here at Equity Story, we can start getting excited with the opportunities. At the moment, it's very, very difficult to get excited with tech stories, which a lot of them are still very, very expensive. Um, so it's a time to go boring. It's a time to be boring. And again, God bless the wolf. He's not with us today, but I mean, I had a look at one of our some of our stocks, IGL. Again, a stock that we've liked, good dividend. It was paying 8% on a PE of 8 when we put it on. It's just gone on and on with it. It looks absolutely superb, and and again a good announcement today where they finished an acquisition of a company they were buying, and they got basically the rest of that company at a very, very good price. the market likes it. And you know what? In a really, really tough day, up she goes. So, maybe if you're a trader, you look at that 250 mark and you think you're taking a profit. But, if you're a long-term investor, you're holding that story and really enjoying a dividend in a very difficult market where you're also getting a little bit of growth. So, um, like I said, God bless the wolf. What an analyst he is, I tell you. Um, and PWR. So again, the insiders have been buying. So we're trending this one at the moment. We've got a little target price of $3, up 10% today. I don't mind. This is a tough market. If you want to take a profit today, go for it. But again, well done. And again, hats off to Mr. Coppets. Again, absolutely brilliant. That's why we pay him the big bucks. I could say that because he's not here. He's on holiday, but we don't really pay him the big bucks. But I think we should do a lot more. But he's very, very, very good and very, very pleased with. Obviously, very proud of the sort of stuff that he does for us. Um, and again, great to see we had a little VRS as a trade. It's already hit our target price. So nice little 20%. I mean, if you can now, it's actually moved higher. I think it went up about 40%, but you can either lift your stop loss. You can put your stop loss at 0.086 or take a profit, whatever you feel comfortable with. Um, I thought I'd just sort of mention, obviously, there are, people say, well, where do you invest if the market's going to have a tough time over the next 2 or 3 months? You can look at ETFs. Now, ETFs are a little bit different than share advice. ETFs are a little bit more complicated. So if you want to invest in ETFs, so, ask your financial advisor more information about them. But certainly, there are ETFs that are market like BBOZ and the Bear and BBUS, and one would expect there's a good chance that these ETFs and what they do, they'll move in the opposite direction to the market, and there's a good chance, I think, possibly over the next 2 months, these are going to go. These are going to be go to a lot higher than where they're trading at the moment, and possibly could be an area where people could be making some money. So like I said, have a look at them and obviously make up your own opinion. Um, Again, ASN came out. This is just amazing. The price action on this stock. They came out again with a. Yeah, I didn't. It was another positive announcement. Let's leave it at that. You can debate the lithium grades or whatever, but generally speaking, this company is coming out more and more positive announcements. And look at the chart in a really tough market. Unbelievable. So congratulations, because I know there's a few people in that one that are doing extremely well. Um, and I don't want to be sort of too negative because we know there are certain sections that are still doing really well. Obviously, we got Whitehaven, the coal sections are doing well. CRN, again, one of the brokers came out today with I think I'll give you the target price on this. It's actually quite interesting if you just bear with me. So a broker came out today with a target price, Macquarie on Whitehaven at 920. So they think it's got a little bit further to go. I mean, for me, it's had a run, so I fully understand it. If you're looking to take a profit, or you might want to take a profit, you're never ever going to get out right at the top. Um, and I think one of the more interesting ones was little CRN. I'll read you the target price on this story if you just bear with me while I find it. Again, all on my own. So again, Macquarie, surprise, surprise, which quite bullish generally speaking. And they've got a target price of 350 on this stock, somewhere near those old highs, which is very, very impressive. So, get it on your watch list. If it starts to trade, it starts to trend, it needs to do a little bit more for me. Well, then maybe we can get on board and start buying that one again. We just need to see a little bit better price action before we get in there. Um, there are some stocks you need to look at to take advantage of this pullback. And the stocks on my radar would be things like Coles. If you can get Coles, it's not quite there. If you can get Coles at $16 or 15, somewhere where it's giving you 5%, I think if you've got that long-term approach, it's very appealing. The boring stocks are going to be the ones. I think Metcash is a buy now. It's giving 5% dividend. If it goes a little bit lower, I'd be having, you'd be possibly getting a little bit more. There are some sort of really, I think, interesting dividend stocks, which in this pullback maybe you could have start having a little bit of a nibble. But generally speaking, the market is going to go lower, and could go potentially a lot lower. And what you might think are bargains today, um, it could be, yeah, it could be much bigger bargains. I think towards the end of the maybe October. Um, so what does it mean? What this means is that it's a great time to be with Equity Story because we've shown you how well we pick the market. We're pretty good at knowing when to get back into the market as well, and I think that's maybe harder than saying the market's going down. It's telling you when to get back into it. So I think this is the most exciting time now over the next 3 months. We need to, this is the time. Buying some really oversold stories. It's a time where you can make those really huge long-term gains. Um, but we just got to be careful when we go in. We don't want to pick the bottom too soon, and we want to get into the markets when we feel they've bottomed and they're on the way back up again. And you know what? The charts will help us do that, and so will our brilliant analysts that we have, Claude Walker and obviously Mr. Peter Koppetz, the Wolf, will help us, I think, get into a lot of those stories fundamentally at the right time. But the charts will help us to get those entry points correct. Um, I think we did a really interesting video beginning of week about stocks that do, the boring stocks that do well in times of inflation. And gold is certainly on that list. And at the moment, we're just not going to go for gold, but I'm going to watch it. I'm liking it. I think there's a trade there. I didn't press a button yesterday. I just wanted to see what happened last night with those CPI numbers. Gold was down, but I sort of liking it. Don't worry. Just wait to the end of the week, and maybe we can pull some ideas on Newcrest or something. Um, um, but boring stocks, the agricultural stocks tend to do well. Elders, your GNC, your oil stocks, Santos and Woodside, your insurance companies, your wine companies, or beer companies like TWE. These are sort of stories that tend to hold up really well in times of inflation. And watch that video. I think we did it on, was it Monday? I think so. I can't remember now. Monday, or was it Thursday last week? But anyway, it's a really good one. We went through all those stories that tend to do quite well in a difficult time with inflation. Um, and that's it. On that note, that's all I've got to say. Like I said, this market's going to go a lot lower. I think you've been listening. Most of you have to Equity Story. I think most of you are pretty well cashed up and ready to pounce. And we're going to tell you when to pounce, but the time's not now because these markets are going lower, baby. On that note, thanks for listening to Equity Story, and look forward to chatting tomorrow. Thank you. Bye bye.